Today is Wednesday, July 6, 2022. Let us take a look at today's crypto headlines. Korea and US agree to share investigation data on Terra Luna. The bottom is in. CNBC's Jim Cramer says crypto has no real value. US government delays enforcement of crypto broker reporting requirements, report. Goldman Sachs executes first Bitcoin futures trade in Asia. Bear market wipes 25 cryptocurrency exchanges in 30 days. Please like, subscribe and turn on the notification button to keep supporting our channel. Korea and US agree to share investigation data on Terra Luna. The two nations have agreed to share their investigation data on the ongoing crypto-related cases including Terra Luna. South Korean Justice Minister Han Dong-hoon was in New York recently to discuss various ways in which the two nations can cooperate on investigations associated with financial crimes, especially crypto-related crimes. Hoon met with Securities and Commodities Task Force co-chief Andrea M. Griswold at the U.S. Attorney's Office for the Southern District of New York along with Scott Hartman, chief of the Securities and Commodities Fraud Task Force of the same office on Tuesday, reported a local daily. The two sides discussed ways to exchange information and strengthen cooperation to ensure timely action on the increasing number of securities frauds associated with the digital asset market, reported a local daily. The two sides have reportedly agreed to share their latest investigation data around Terra Luna, a crypto project under investigation in both countries. The $40 billion Terra ecosystem crash has attracted legal scrutiny from both countries. The U.S. has recently opened a new investigation against Terra co-founder Do Kwon, while the South Korean prosecutors are looking into several charges including fraud, market manipulation and tax evasion. The cooperation between the two nations could be the first of many as crypto-related crimes have become the focus of regulators in recent times. South Korea has emerged as one of the most strict nations when it comes to crypto regulations, ensuring strict Know Your Customer (KYC) and anti-money laundering (AML) guidelines. The Terra saga has also prompted Korean lawmakers to form a new crypto oversight committee to assess the new crypto projects listed on crypto exchanges. Many experts have predicted that the crash of Terra UST would prompt regulators to favor centralized stablecoins over algorithmic ones. Due to the lack of clear crypto regulations, tracking and prosecuting these crimes, which often involve cross-border transactions and laundering, becomes increasingly difficult and complex. For example, a Dutch university paid 200,000 in Bitcoin, BTC, as a ransom in 2019. The investigators managed to track one wallet to Ukraine, and eventually had to work with the local authorities to get back the funds nearly 3 years after the hack. The bottom is in. CNBC's Jim Cramer says crypto has no real value. Mad Money host Jim Cramer has changed his sentiment on crypto again, predicting the total market cap will tank below $1 trillion as there's no real value there. Given his track record, some in the crypto community believe the market bottom may now be in after CNBC host Jim Cramer said there was no real value in crypto and predicted the market would tumble further. Cramer is known for giving his investment expertise as the host of CNBC's Mad Money. but has developed a reputation in the crypto community for giving stock and crypto tips that generally end up being wide of the mark or the complete opposite of his prediction. His predictions, along with his on-again off-again love-hate relationship with crypto, have become a popular meme among the community over the past few years. Appearing on a segment of CNBC's Squawk Box on Tuesday, Cramer was commenting on the bearish performance of various asset classes in 2022. He stated that the current sector he is currently most interested in is crypto, as he slammed it as essentially being worthless while predicting more carnage ahead. Crypto really does seem to be imploding. Went from $3 trillion to $1 trillion. Why should it stop at $1 trillion? There's no real value there. How many companies can Sam Bankman-Fried save? He added. The comments are in stark contrast to just 2 months earlier when Cramer enthusiastically stated that he was a believer in Ether, ETH, and you could easily get 35 to 40% return on investment in the near future. This prediction occurred when ETH was priced at roughly $3,000, and the price has since dropped 62% since then. During the segment, Cramer also went after non-fungible tokens, NFTs, as he questioned the amount of money that is being thrown around on such an awful asset class. NFTs, I mean, you look at these companies that you've never heard of and they blew up over the weekend, and you say to yourself, holy cow, there's $600 million just going down the drain. What an awful asset. NFTs sold to you. Made up? In response to Cramer's tips, user accounts such as the Inverse Cramer ETF have sprouted up on Twitter, which tracks the stock recommendations of Jim Cramer so you can do the opposite. The profile has obtained 62,800 followers so far and has recently observed the stock prices of Ford and Nike dropping 25% and 7% apiece since Cramer recommended buying them. Cramer first bought Bitcoin, BTC, back in December 2020. During the bear market in June last year, Cramer stated he sold all of his BTC, saying the price is not going up because of structural reasons. 4 months later, the price of BTC surged to its all-time high of roughly $69,000. Another notable tip occurred in August 2021, when Cramer suggested buying Coinbase stock coin as it was cheap at roughly $248. At the time of writing, coin is priced at $55.41, according to Yahoo Finance. US government delays enforcement of crypto broker reporting requirements, report. The reporting requirements, aimed at reducing the size of the tax gap, were scheduled to take effect in January 2023, with crypto firms sending reports to the IRS starting in 2024. The provision in the U.S. infrastructure bill signed into law in November, which will require financial institutions and crypto brokers to report additional information, could reportedly be delayed. According to a Wednesday report from Bloomberg, the United States Department of the Treasury and Internal Revenue Service may not be willing to enforce crypto brokers collecting information on certain transactions starting in January 2023, citing people familiar with the matter. The potential delay could reportedly affect billions of dollars related to capital gains taxes. The Biden administration's budget for the government for the 2023 fiscal year previously estimated modifying the crypto tax rules could reduce the deficit by roughly $11 billion. Under the current infrastructure bill, Section 6050I mandates that crypto brokers handling digital asset transactions worth more than $10,000 report them to the Internal Revenue Service. with personal information likely including the sender's name, date of birth and social security number. The requirements, aimed at reducing the size of the tax gap, were scheduled to take effect in January 2023, with companies sending reports to the IRS starting in 2024. "Delaying is smart," said Jake Chervinsky, head of policy at the Blockchain Association, in response to the news. "We're getting closer and closer to the effective date of the infrastructure bill's tax provisions, and we're still waiting for guidance or rulemaking on implementation." Since the passage of the $1 trillion infrastructure bill, many industry experts and lawmakers have suggested the crypto broker reporting requirements are overly broad, placing an undue burden on individuals who may not have the necessary information on transactions. In June, crypto and blockchain advocacy group Coin Center filed a lawsuit against the Treasury Department, alleging the tax reporting requirement could impose a mass surveillance regime on ordinary Americans. Goldman Sachs executes first Bitcoin futures trade in Asia. Despite the cryptocurrency market still reeling from the collapse it has gone through in the past weeks, major financial institutions are increasingly recognizing the opportunities that the new asset class can offer. One of them is the banking giant Goldman Sachs, NYSE, GS, which has executed the first block trade of Bitcoin, BTC, futures in Asia. Through the intermediation of Fee Securities LLC, a subsidiary of brokerage provider BGC Partners, according to a press release published on July 5. As per the press release, this is the first ever intermediated block trade of CME Group Bitcoin options contracts in Asian markets, and it was arranged between Cumberland DRW LLC and Goldman Sachs. Commenting on the announcement, CEO Asia Pacific for BGC Brad Howell expressed optimism about partnering with Goldman Sachs and Cumberland to this end, adding that this transaction marks BGC's continued commitment to expanding our cryptocurrency offering and to working with our global counterparties in developing this rapidly evolving asset class. The press release also said that BGC was planning to launch electronic platforms and voice/hybrid listed brokerage desks in major financial centers, anticipating growth in the cryptocurrency sector. Goldman Sachs looks toward crypto future. On the other hand, Goldman Sachs has earlier shown interest in introducing cryptocurrencies into its operations. In December 2021, the Wall Street Titan joined several other top United States banks in exploring using Bitcoin as collateral for offering loans to institutions, focusing on products such as futures and other synthetic crypto offerings. It is also worth noting that the banking giant's former CEO Lloyd Blankfein acknowledged in late January that cryptocurrencies were evolving, and that Bitcoin's underlying value was beneficial to the general financial sector, after he initially showed skepticism towards the budding industry. Finally, Goldman Sachs' announcement to start offering its first investment vehicles for Bitcoin and other cryptocurrencies to its clients in the second quarter of 2022 as part of its plans to introduce support for a full spectrum of digital assets. Bear market wipes 25 cryptocurrency exchanges in 30 days. The ongoing cryptocurrency bear market has impacted several elements of the sector, with exchanges emerging as the latest entities to feel the hit. Indeed, the number of exchanges has dropped as crypto-related businesses struggle to remain afloat amid significant sell-offs. As of July 6, the number of crypto exchanges globally stood at 500, a drop from highs recorded in previous months. We have determined the sector has lost 25 exchanges in 30 days, considering that on June 6, the figure stood at 525, according to CoinMarketCap data. The wipeout of crypto exchanges is partly tied to the drop in value of the general crypto market as several businesses in the space look for exits. Besides the crypto market meltdown, exchanges have been impacted by other macroeconomic conditions, such as rising inflation figures that have made it challenging to sustain businesses. Crypto businesses readjusting plans. Crypto companies generally responded to the meltdown by re-evaluating their plans for the future, and opting out of the industry appears to be one of the options. Sell-offs in major digital currencies like Bitcoin has correlated with the broader slump in stock markets, particularly in the technology sector. The crisis was deepened by the Terra Luna ecosystem crash, an aspect that might have eroded trust in the sector. Notably, smaller exchanges are likely the most impacted, considering some investors have opted to cease trading activities and hold their assets awaiting the next market rally. Additionally, the escalation of the bear market forced retail investors to exit the market. Interestingly, the massive price correction has not spared leading exchanges that have been forced to readjust their business to remain operational. For instance, Coinbase, the leading exchange in the US, imposed a hiring freeze alongside announcing a layoff to sustain its operations. Regulatory response. Following the exit of the changes, regulators might be alarmed and enact strict laws aiming to protect investors. Notably, most exchanges shutting down sometimes fail to share the status of investor deposits. Such circumstances have consequently eroded trust in the growing crypto sector. Although the crypto market is relatively new, some market observers believe the closure of exchanges might benefit the sector. They opine that the bear market is an excellent opportunity to eliminate non-serious crypto entities. Generally, the ongoing market downturn continues to impact the global economy. The focus will be on how the crypto exchanges and companies will handle the bearish pressure and survive the ongoing financial onslaught. Don't forget to like, subscribe and turn on the notification button so that you won't miss any updates.